Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, November the 2nd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on. A lot of economic data to go over. Yesterday, though, we had the FOMC meeting with the results as to whether or not they were going to increase rates. They did not. They left them unchanged at 1.25. But then now in the across the pond today, we got a couple of economic points coming out of Great Britain. We got construction PMI came in at 50.8. That is above 50. Now remember, any of these PMI, Purchasing Managers Index, any of those type of economic data points, anything above 50 shows expansion. Now, Great Britain has had that below 50. Last month's reading was 48.1. They were expecting 48.3 here. So now that we are above 50, showing expansion even in Great Britain there. And then a couple other ones was like a Italian PMI, French manufacturing PMI, and Spanish PMI all were above 50. So good signs there. And then we also got the here in the United States, nothing else really there that I'm seeing. Here in the United States, we got the unemployment numbers. We got the unemployment claims came in at 229,000, expected to be 239,000. So claims being lower, generally a good sign. And then preliminary non-farm productivity, which is kind of an indicator as to what we're going to see tomorrow. This isn't the widely looked at one, but it's a preliminary indication coming in at 3%, so showing that the unemployment rate is increasing. So keep that in mind going forward. And then preliminary unit labor costs came in at 0.5%, right in line with expectations there. Natural gas storages came in at 65 billion cubic feet, expected to be 63 billion cubic feet. And we also had Dudley speaking as well. And then it's also a Japanese bank holiday, which is the reason why we're seeing a little bit of lighter volume today. Whenever they're having their bank holidays, it's kind of the same thing as we see here, a little bit lower volume going on. All right, on to the overall markets. We've got crude oil slightly higher on the day. It's this value area high acting as support. Remember, we talked about the going up and testing that $55 a barrel area. Hasn't been able to really achieve that today, but finding a little bit of support here on this value area high. Those are always going, these volume nodes and the value area high are going to act as supports as well. All right, gold futures kind of bucking my theory here of it wanting to go down to 1250. We're getting a bit of a bounce here. I'm still not too concerned about it. It's just basically, a minor correction here. We're right there at the point of control where the most volume's been spent, so it could stall out here for a little bit before going down and testing that, but I still think that that is a pretty sure thing in the near future. Bonds moving higher, almost up a point today, 25 ticks, despite the fact that the interest rate increasing is almost a sure thing. Not really sure why bonds are moving higher right now, but they are probably just as that old motto goes, is the market will try and hurt as many people as it can at any given time, and it looks like the bonds are kind of bucking the trend of what these Fed governors are saying for the most part. We've got VIX moving unchanged right now, but it has moved back into that double-digit area of the tens. Anytime we get into the single digits, that's just super low implied volatility. But the NASDAQ, I think, is a little bit of a catalyst to causing that move higher, as I've talked about in the past. We've got the Dow Jones moving almost unchanged for the most part, down $3 on the day. Really light volume, as you can see here. The volume is really low, and that is going to have to do with that bank holiday in Japan that I was talking about. Now, NASDAQ, of course, they bumped me out and then created another doji yesterday that looks like it was going to be a high. Today it is confirmation to the downside. I haven't put anything on in the queues, but I might do something like that later on today, just a buy a put spread or something like that. I don't want to eat up a lot of margin. Plus, it's got pretty low implied volatility, so I'm not going to be selling strategies around that. I'd rather hold that margin for some of these earnings trades that are just around the corner. Then we've got the E-mini S&Ps down on the day as well, down 5 points. But it's really just flattening out on this trend. I believe it's going to roll over a little bit, but we haven't seen anything other than the NASDAQ to really confirm a situation where it looks like it's a confirmation to the downside. Today, as you can see, we pretty much sold off as soon as the market opens. Despite the fact that we didn't have any bad economic data, it looked actually pretty decent across the board. Unemployment claims could be scaring people ahead of tomorrow's unenjoyment number, which is what we called the non-farm payrolls on the floor. Onto a few things that I've done here. Facebook, I tweeted this stuff out yesterday. These are the earnings trades that I did, so I didn't get a chance to really talk about them in the market commentary yesterday because I put these on at the end of the day in line with my rules that I set up in these earnings webinars. So if you haven't seen those, you need to go and watch those, especially if you want to participate in earnings. As a matter of fact, in one of my webinars recently, somebody said, hey, isn't earnings a crapshoot? Well, in a sense, but you are pretty much guaranteed volatility crush, which is what the premium seller wants to see. And the beauty in that is it happens almost immediately and overnight. So it's a great way to get in and out of trades almost immediately. And what I did in my margin account is I just went in and I sold some puts, and they were naked puts, and I sold the November 170 puts for 62 cents. I was able to buy those back for 7 cents in my margin account. Now, I covered my trade in my margin account after I covered my trade in my IRA, so I got a penny better, which is something to write home about, I suppose. And then in my IRA, now remember we talk about IRAs really eat up margins when you're trying to do naked puts. You can't do naked calls in an IRA, but you can for some reason do naked puts, but they basically take margin to zero. So I show in these webinars how to set up a naked synthetic, in a sense, for your IRA, and it meets the rules on a naked short call, or it meets the rules on a call spread, and you're able to sell that short call. And the same idea with the puts. We're just basically going out and buying the first strike that we can to define that risk for a nickel or less. And what I did in Facebook is I went in and I sold those same November 170 puts, but then I defined that risk by buying the 155 puts, and I was able to get that trade off for 60 cents. So I basically paid 3 cents for that defined risk, and it limited a lot, or it allowed me to limit my margin layout quite dramatically. And then when I go out and I cover this trade, I'm just going to leave those long puts on because it doesn't make any sense to try and sell out of those for a penny or maybe a penny or two. And the fact of the matter is there's not a lot of people out there trading afterwards anyway. So, it doesn't really make a whole lot of sense to get out of that long put for a penny or so when you can just leave it on and kind of roll the dice in a sense for a penny. That to me is worth that, just leaving it on and letting it either expire worthless or something crazy happens that could become a real big winner. So the risk there versus the possible potential reward is definitely worth it. Anyway, so I only covered the 170 puts, and I bought those back for 8 cents. Like I said, I left on the long 155 puts. just for whatever reason. And I covered those trades almost immediately off the open. Same with BABA, but BABA I only did in my margin account. It was a little bit too margin intensive for my IRA. I had to make that put spread so wide that I just didn't want to do it. So in BABA, in my margin account, I went out there and sold the November. And these are the weeklies also. These aren't the November monthlies. These are the weeklies that expire tomorrow. So keep that in mind. That's for Facebook as well. Went into BABA, ticker symbol BABA, and I talked about this. I've been on their website a couple of times. It's nice that you can basically buy direct from China, and they've kind of streamlined that process, which is really relatively easy after you get used to what you're looking at. But in BABA, I sold the November 172.5 puts for 91 cents, bought them back for 10 cents today. And obviously that was on the open. It's gone down a little bit further, so I would still think you'd probably get out, pretty decently. But at the end of the day, they beat earnings by almost 19 cents. I think it was supposed to be 110. Came out with 129 earnings. So BABA was a win right off the bat this morning. One thing I want to talk about is MasterCard. I think I talked about this yesterday. I want to just make sure that you guys all know that I put this trade on after earnings. It still had high implied volatility. Volatility had since come out, but the day after the earnings, they still had pretty high implied volatility. As you can see from this big move that kept volatility in there. So it was a really rare occasion where we don't see that volatility immediately crush right after earnings. So I was able to get in there with implied volatility percent of above 50 and sold some puts in there. And I sold the November 140 puts in there originally for 55 cents, and yesterday I bought them back for 14 cents. So I'm not sure that I talked about that. I wanted to make sure that you guys were aware of that. You could probably still get out for a pretty decent profit. It hasn't moved that much since the time that I got out. Now, today I'm going to be looking at a couple other ones you guys probably know about. Facebook is coming out with earnings after the close. Don't really know what I'm going to do with this. I'm most likely going to play it to the upside. I think that they're going to come out with better than expected earnings. Right now, they are going to be releasing after the close today, but 155 is the estimated. So, did Facebook already come out with? I was looking at the wrong thing. Oh, Facebook we already had. Sorry, I'm not looking at Facebook. That's when I just talked about Apple. So I get ahead of myself. That's what happens when you start trying to think ahead and keep talking at the same time, I guess. You end up putting your foot in your mouth, which is what I just did. Anyway, Apple is the one that I'm going to be looking at today to the upside. Everybody's going to be probably playing that one. It's really easy to get into those, and I'll be doing those November weeklies. The other one is Starbucks, and I'm not sure directionality with Apple. I want to probably play that to the upside. Starbucks, I just don't really know. They got the pumpkin spice coming out, so maybe their earnings are going to beat. But as you can see in the past, they've really gotten decimated, and they've been outside the market maker moves on most of their earnings in the past year anyway. So I don't know if I'm going to play this. If I were going to play it, it would probably be to the downside or to do a strangle. And the other one that everybody is probably looking at, but I'm going to bypass, is Pandora. At the end of the day, Pandora has a tendency to not make money, so those are the ones I don't really like to trade. And two, it is below $10, and you can't really get a whole lot of premium for your risk, so I'm going to stay away from that. There are a plethora of other earnings that I've just decided I'm not even going to look at. Bid ask in the options montage are not very good, so I'm just going to wash my hands of it and stay away from those. Now, tomorrow's webinar is going to be basically setting up for the next earnings cycle. Right now we're trading the earnings, but what do you do in the interim when there's really low implied volatility and not a whole lot of things out there to do? Well, we're going to try and be right on our directionality, which is one of the things with this, and we're going to be getting into the Christmas trees. So some of these where we can take advantage of that, all right, where the market's going to kind of settle down in and around that. Gotta love it when dogs can open the doors. So check that out. A lot of people have been asking about it. It's basically a 1x3x2 butterfly, but on the floor we used to call it a Christmas tree. And I'm going to be going through all of those rules, how to set that up to increase your probabilities of success. All right, so go to protraderstrategies.com, sign up for that. I hope to see you guys all there. And if you can't take that, take it easy. Missing all day today. There we go.